Good morning, guys. Welcome to this Tuesday, June 17th. And Mark, right at the open yesterday, the new session, the whole thing just tanked. As it didn't tank, but it pulled back this whole little retracement we talked about potentially could happen before the close. That happened right at the reopen again. So that's kind of surprising to see. They were holding this range pretty freaking good all day yesterday into the close, and then at the opening, right back down again. So that's how we started off, a little bit of a pullback in the overnight. Now, and we have news coming out this morning. At 8:30, we get retail sales, import-export prices. At 9:15, we get industrial production, business inventories, and housing market data coming out at 10. 5-year auction, 5-year tips auction at 1. So that's what we got going. So 8:30, 9:15, and 10. Also, the Fed meeting begins today, and it could be a holding day, could be a day, it could be a trending day. Who knows? It used to be pretty much holding days prior to these meetings, but lately it's been a fair amount of range actually during the day prior as well. So. I'm not going to assume it's going to be a little holding day going into today's trading or for today's trading. I'm going to watch it and see what happens. At this point, we had a pretty good pop up here yesterday. It's a little strength showing there, and that's been knocked down right now into in the overnight. So far, the London session looks like they're trying to trade back up again, but they were all the way down here to that 6,045s. Reverse retesting support here. You can see that area 6,040 to 50. So they were right down there, reverse retesting it. And the key thing now is they're going to be able to get back up above the 65s again. So that's how we start off the day. I would start off range bound actually. I would maybe keep a slight bias to the upside, but I would start off range bound and see if they can hold that 65 level. If they hold 65, I'm going to be more likely to stay on the long side. But initially, I'm looking for short against that 6,080 and the 90s for rotations down. Looking to buy against the 50s and the 40s for rotations back up. And then let's see where they're going to go from there. So it's kind of a tight range, but if they trade below that 6,040s, I think they're right back in that lower range again. And if they can get up above the 6,080s, I think they have a good shot at it, maybe start extending again. However, we need to pass that 90s as well, get past the motor off yesterday. So if we can clear both these resistance areas, I think we're in pretty good shape to extend to the upside. So that's kind of how we get started. Fairly straightforward, I think. We are still pretty close to the highs again. We're pretty freaking close. It would be a shame if they can't get up there, but you never know. Yeah, too many cross currents out there, which potentially can derail stuff or potentially rocket it higher. You never know, right? So I would just be a little bit cautious about the whole thing and see just let it see what direction it's going to take. So below this 40s, I'm going to be back range bound for sure. Above the 90s, 6,090s, I'm going to be back on the long side. And if they start taking out the lows here at the 59.85, we got some issues going on at that point. But if they back down below the 6,040s, we are back in that lower range again and staying range bound. So starting off that way, so looking to buy against support 6,050s and the 40s for rotations up. Looking to sell against 80s and the 90s for rotations down. And we're trading right at that 65 right now. So we'll see what side they're going to go on that one. All right, so that's the ES to get started. Looking at the Nasdaq and the bonds. Bond market, a little bit to the upside. They are pretty much in the middle of this range right now. So just to show you that, so they are right smack in the middle of this. I let this split stay where it's at. And you can see how we have nice distribution, slowly grinding to the downside. And given this distribution and that the mode is slowly moving in down in the distribution is, I would probably start off range bound, probably favor the short side in the long term, but in the short term, just trade it as a range bound market. So so I would start off by so range band. I'm going to buy against that at this point the 113.06s, the 113s down to the 12.24s, maybe even down to the 12.20s. So these support areas. Looking for short setups against the 15, 16s, the 20s. And I would probably say about if they start trading above the 20s, I'm going to go back on the long side and see if they can retrace this to the upside a bit. So at this point, uh, yeah, it's about 113.20, probably it's staying on the long side, switching to the long bias to see how far they can retrace this to the upside. And that would be kind of consistent with them retracing back up towards this attractors. If I fold back this guy again, you can see we have this upper area, the 1509s. And if I split out that end split again, you see that is kind of the starting point. So the 114, 115 round about there, little volume edge. So that's the where I think they're heading. Attractor is 116. And this whole area of volume is potentially where they can trade in. So they can certainly drift higher or drift higher, but trade higher up to that 114, maybe even up to the 115 before we find some good resistance. So if they start taking out that 113.20, I was staying on the long side and see if they can get up to the 114s, maybe even higher. So initially looking to buy weakness, sell strength, pretty much range bound approach to get started. A little bit more room to the downside before I shift my bias there, but that's kind of how you get started. Bond market has been just kind of going back and forth, not a whole lot of driving it. That's good. Stable bond market is good. We don't mind that at all. On the Nasdaq, same story there. Popped down, retraced pretty hard right from the get-go at the open yesterday when the session reopened. Reverse retesting that 980s, and reverse retesting the 980s and then backing off a little bit. So let's see how far they can take it on the upside. So at this point, if they start taking out that 22,000s, I think we're back in this lower range. Below the 21,700s, we got issues, right? So that's kind of the same kind of dynamic as happening on the ES. So initially looking to buy weakness, not much to buy against on the downside. They pretty much got this support. I could make this a little bit wider, to up 22,000 to the 22,020s. I'm going to leave it there. Well, maybe a little bit wider. Hang on. Make it a little bit wider just to capture this edge right there. So I'm going to capture that edge right there, like so. There you go. It's a little bit wider. And so if you look at that thing right now, so looking to buy against the 22,000s, it's really from 22,000 to 22,020, but this support area for rotations back up. If that comes out, I would be back more range bound. We probably give it one more level down to 960s just in case, because Nasdaq is kind of volatile. But we are reverse retesting in this area. So below this 960 area, we're definitely back range bound. So I'm going to buy against the 22,000s, 960s for rotations back up. Looking for short setups against the 115s, 22,140s up to the 170s for rotations back down. Above 170 and back on the long side, I think we are at a spot where we can start extending again at that point. So we'll see how strong this market gets. It's a kind of surprising little pullback we got there. We're holding that area so nicely all day yesterday, and then at the open, they reversed the whole thing right back to the start of the day session. Go figure, right? Go figure. Anyway, so they didn't get any further though. They just kind of stalled at 22,000. So that reverse retest held, at least for now. Doesn't mean they can't retest that one again, but as I said, I'm going to be looking to buying against that 22,000s and the 960s for rotations back up again. So that's how we get started on the Nasdaq. Very straightforward. Finally, oil and gold. And today is the last day on the July expiration. Tomorrow we roll to the August expiration on oil. I try to roll this right now. Yes, make sure I'm right. Yeah. So July is still the front month, as you can see the volume start tapering off a bit. So oil, pretty volatile still, holding around the 73, 74. They backed off pretty good yesterday. They retraced back up here in the late yesterday and back in the overnight. So they're back up in this range. Looks like they're trading around the 72, 73 area. at this point at least. Let me see my capital flow here on oil. Like so. And looks like they're going to start finding some spot here to start building value. So they cut off the buying here at the 77, so cut off the selling at 69. Looks like they're settling in around 73 right now. So we'll see where they go from here. But it could spike in either direction pretty freaking quick. So they're very difficult to say where they're going to go. But I would say in the short term, pressure is to the upside. But I would just emphasize volatility. You saw what happened. They retraced it from 70 all the way down to 69, and 77 to 69 very quickly. So it could change very quickly. So I would just be very cautious trading oil right now, especially now in the rollover when you had volume shifting into the next expiration. Finally, gold back in. I mean, I didn't call out any levels on oil, but let me take a quick look at that one again. So on oil, at this point, looking to sell strength, 73.30, 73.60, 74s for rotations back down. Above the 74.70, back on the long side in a big way. And on the way down, I would look to buy again, support 72.40, 72, 71.70, 71.30. And I think below 71, just back on the short side. So that's kind of the range we're trading in. So above 74 and below 71, I think we have, if that's our range to really pay attention to. Then you can always add one level outside the obvious on top of that. Now gold spiked a little bit and it backed off. And so they kind of backed off the highs. They're down here at that volume edge, 32.10. Trade building value right here. So far support's holding at 33.90. They've been trying to take it lower, cannot do it just yet. And we just have to see where they're going to go from there. 34.10. So yeah, so look at that volume edge. If they stay here below it, they're kind of taking it out. It's that 34.10 really, that volume edge. So they're kind of down in this lower range again. And chances are probably going to be seeing them trading down in this lower range and staying there. If they start taking out that 34.20s, we're back on the long side. I think that's going to confirm that they're heading higher again. And if they take out the 33.90s, I would look for a run down here to test that 33.70s at that point. So that lower edge right there, that would be the support area to look for, that volume edge. So in this starting off range band, I would maybe start with a slight bias. Well, here it's probably it's pulling back. They cut off the buying and they're pulling back. So I would probably start with a slight bias to the downside to see if they can retrace this further initially. And if they can't take out these lows pretty quick, I would be back range bound on it. So that's kind of the way I'm looking at it. So it's not quite a reverse retest. They're backing off from a move out of the middle. So I'm looking for a retracement still. So it's still looking for moves to the downside. And you will see how far they can take it. So at this point, looking to buy against support at 3,400 and 33.90, 33.92 for rotations back up. And looking for short setups again, 34.13s, 34.20s for rotations back down. Above 34.20s, start looking at a move to the upside at that point. All right, so fairly tight range to watch, and let's see what side they're going to go on. So either you want to keep retracing it a bit further, or we may see this holding and then retracing back up again, which means that value probably start building a little bit higher at that point. But we'll find out. So that's gold. Trade that as a range bound market right now. Slight bias to the downside to get started. Let's see if they can take it lower. And if not, and we're probably going to be stuck in the range here. All right, so that's oil and gold to get started. Back to the ES. And so far, we're pretty much where we left it. So let's see what happens. So a lot of stuff going on, a lot of cross currents. We had a Fed meeting starting today, and we have news at 8:30, 9:15, and 10 o'clock today as well. Alrighty, guys, we'll wrap it there. So good trading, guys. And I will see you back at 11:30 for the next update. Later.